St. Mary's College Biz Ed 123, Financial Management, Section 4, Team 7, and Action.
Hi everyone, my name is Sarita. Today I have with my group members Mauro and Keith. We have done an evaluation for the company JP Morgan and Chase. Our recommendation is to buy with the intrinsic value of $92, which is greater than the current price of $77. So these are the following topics that we will go over today. First is the company overview. Second is their financial condition. Third, we'll have their stock valuations, and then lastly, our final recommendation. So a brief background of JP Morgan Chase is that they are a multinational banking and financial services holdings group, which was established in 1871, which is currently headquartered in New York City. They have total assets of $2.4 trillion. And this brings me to the next slide, which is their ranking in the U.S. industry of banking. So first we have JP Morgan, second we have Bank of America, third we have Citigroup, and fourth Wells Fargo. So this is a graph of the products and services within the company. So the operating segmentation, 40% of it goes into consumer and community banking. The next rank is 34%, which is corporate and investment bank. 7% of it is commercial banking, and 12% of it rests in asset management. To the right is a chart of the top business drivers in the company, which all umbrella under the consumer and community banking group. Next, we have the leadership positions within the company. So I'm just going to mention the top three, which are one, James Dimon, who is the CEO of the company. Next, we have the COO, who is Matthew Zames, and then third, Marianne Lake, who is the CFO.
Here's our SWOT analysis of JP Morgan. Some strengths include having a strong global presence operating in over 100 countries around the world. They have a large annual sales volume of about $95 billion. And another thing that JP Morgan does really well is incorporating technology into their company to improve their services and products to the consumer. Some weaknesses include having previous scandals that have tarnished the bank's reputation with their consumers. Some opportunities that JP Morgan provides is opening new markets, new products and services, and new acquisitions. Some threats in JP Morgan's company is having a lot of competitors, both domestic and internationally. There are some cybersecurity issues and hackers which prove to be a risk to the consumer, and regulations set by the feds which can restrict a lot of our services. Here's our technical analysis with a target price of about $92 and a current price of $77. We see an upward moving trend in the moving average. We're rebounding off of the support line. We have an overall rising volume in the stock price. Moving on to our financial conditions, compared to our peers, the profitability ratios with net profit margin of about 22.4. We've rated us about above average. Return on assets of about 0.86. We've rated JP Morgan average. Return on equity of 9.5. Rated them good. Debt to equity ratio of 1.5, we rated them average. Financial leverage of 9.9, rated them average, and price per earnings of a multiple of 13, we rated them average with an overall rating of average.
So for our perpetuity model, we grew our earnings per share out to 2017 at a value of $6.49. We used return on equity as our discount factor. We got our return on equity by using CAPM. We used 7%, 8%, and 9%, and we chose our 8% return on equity, which gave us an intrinsic value of $81, which yielded a 5% premium over the $77 current stock price. For our Gordon growth model, we use the same discount factors of 7%, 8%, and 9%, and then growth rates of 1%, 2%, and 3%, and we ended up using our 8% discount factor, 1% growth rate, which yielded us a $93 intrinsic value, which was a 20% premium. For the multiple approach, we took kind of the average of the price earning multiples from the different banks. We saw that 13, 14, and 15 times multiple would be a fair value. Using the 14 times multiple, we got a $91 intrinsic value, and that yielded an 18% premium over the $77 current stock price. And then for our discounted cash flows, we grew our EPS out over the next 5 years with growth rates of 8%, 4%, 3%, 2%, 2%, and a terminal value of 1%. And we use a weighted average cost of capital as a discount rate. We calculated that using a 60% weighted debt, 40% weighted equity, 6% cost of debt, and 9% cost of equity. And this gave us a 7% weighted average cost of capital. We ended up using a 7%, 8%, and 9% discount rate, and decided that the 9% was the most relevant, and ended up with a $95 intrinsic value, which gave us a 23%. So for our weighted stock valuation, we used 3 different weighting methods. The one we ended up using was a 10% on perpetuity, 10% on going growth, 30% on the multiple approach, and 50% on the DCF. And that yielded us a $92 stock price, which is a very intrinsic value, and that was a 19% premium. So we recommend 12 trades. For financial services and JPM stocks, we recommend buying on margin, buying call options, and writing put options. For financial services ETFs, we recommend buying on margin, buying call options, and writing put options. And for financial services indices, we recommend buying forwards, buying futures, buying calls on futures, and writing puts on futures for a total